Yes, as we say in our report today, even though we do see production from the OPEC countries falling from November, and we are expecting losses from Russia in the months to come after the embargo on Russian crude came into effect earlier this month, we're seeing that the weakness in demand, the macroeconomic environment is weak and oil demand is falling. We're expecting supply to slightly overtake demand through the remainder of the year and into the early 2023 before the market tightens again as demand recovers.
I want to pick up on the lines about Russia as well. I think it is so interesting in your report today, you flagged that Russian oil exports have actually increased by 200,000 barrels per day, the highest since April. And what the report is saying is that crude oil exports haven't changed that much, but diesel exports have risen quite substantially. What is going on there and who is buying?
Yes, indeed. We're seeing that export, as you said, Russian total exports were more than 8 million barrels a day in November. Crude oil exports around 5 million, product exports increased last month. And we're seeing that Russia is pushing more oil onto the market ahead of the EU embargo on crude oil took effect from the 5th of December. But we have seen a very notable shift in the destination of that crude. Last month, we saw European countries scale back further their purchases to around 1.1 million barrels a day of crude. Seaborne was down 400,000. And actually, the flows through the Druzhba pipeline were higher than the seaborne import for the first time. So we're seeing a big shift in crude oil exports. Obviously, most of that oil that's been backed out of Europe, the US, and other G7 countries have gone to Asia, and we see that continuing to shift as we move forward. Last month, India took a record 1.3 million barrels a day of Russian crude oil. In China, Russia remains the biggest supplier of oil to China, but we haven't seen a big change compared to pre-war levels for China as the economy has slowed, refinery activity and crude purchases has slowed compared to earlier in the year. Turkey as well has taken up buying more oil. But for products, we haven't seen a big shift in destination yet. In November, for instance, we saw Russia exporting more than 1 million barrels a day of diesel. The majority of that is still coming to the European countries, and it increased ahead of that product embargo coming into effect from the beginning of November.
Yeah, Toril, good morning. Then Arabile here as well. If Chinese demand does then grow again, I mean, you made note of how that economy, of course, has slowed down quite significantly. If that demand does come back on board, that could impact things quite dramatically, couldn't it? I mean, could that be a massive outlier in this market that one would have to be wary of?
Yes, of course. As we note in our report, I mean, we do see oil demand growth slowing from this year to next year. We have oil demand growth of about 2.4 million barrels a day this year. Next year, we'll be 1.7. But that depends on the rebound in the Chinese economy, easing of restriction to fight COVID, and a recovery in oil demand. So next year, really, we do expect that reopening of the economy to take place gradually, and China accounts for more than half of our projected oil demand growth in 2023. This year, Chinese oil demand has fallen by 400,000 barrels a day year on year, which is the biggest decline that we've seen ever from China. So depending on the reopening, that will have a major impact on markets.